traders. Welcome to yet another weekly analysis. So for this week, we'll be dealing with a couple of pairs. We'll be dealing with a couple of pairs using the top analysis. So let's get right into it. So we've already seen that the dollar, the euro USD, the Canadian dollar, they are moving in a specific direction that they haven't moved in a while. You see what I'm saying to you? So now we need to understand something, yeah? We need to understand that, our job in the market is to actually ride the trend. That's our job. It is not to create a trend, it is to ride the trend. You see what I'm saying to you? So most people might be thinking, oh, I'm gonna wait for the market to, get into this specific, trend, or the euro or the euro dollar should be bearish, it shouldn't be bullish. That's what I'm saying. People might be thinking, no, it needs to be bullish. Sorry, it needs to be bearish. I have to sell it and not buy it. Well, you need to understand that, like I said before, our job in the market is not to predict. Sorry, it's not to create a trend, rather to ride the trend. So let's use the top down analysis from the monthly time frame. The monthly time frame tells us what exactly is happening in the market. That's what the monthly time frame does. It helps you zoom out. I say again, it helps you what? It helps you to zoom out and see the market from a higher time frame perspective. So moving forward now, if you look here, you know, January 1st, 2025, you can look here. You've seen that we created a push to the downside that had never been done before, or rather, it has been done before, but not after this range. Now the question remains: what if this push right here, is also a pull, is also a fake out, like this one looked like? What if this is a fake out? Now, like I said, it is not for you to create an idea; it is for you to ride the idea you see. You see what I'm saying to you? So if the market is looking bullish, I'm definitely going to be buying. And when the markets were here, looking like sales, huge sales, we sold. We sold and we sold until when we're no longer able to sell, and then buys started to come in. So right now we've seen that, in this range, we've been in this range for at least 2 3 years. We've been in this range for rather 2 years, rather. And then we're having breaks from above and from below. You see what I'm saying? So now we're having from above, we look for buys. We look for opportunities to buy to the upside. Now on the weekly time frame, we need to trade in the direction of our overall perspective. Now, since we're bullish, we'll take that idea and we'll keep that aside. Now on the weekly time frame, we can see that we've broken a very, very important area, right? We've retested it. Now we have a bullish engulfing 2 3 weeks worth of data. You see what I'm saying to you? The same thing happened here. It broke, it retested, and then it fell all the way to the downside before it tried to retract, and then went all the way to the upside. Now the same thing that we did here, we're gonna have to do it here. It has retested. We're looking for buys. I'm already in the buy here. I'm in the buy here, So I'll show you what I mean and how I executed the buy. So moving to the daily time frame, right? Now, on the daily time frame, we have to make sure that we're looking for buys, not sells, not scalps, not reversals, not nothing, but buys. And now on the day time frame, what did we see? When the market broke above, I was waiting for it to retest before I start executing. That is how it is. We need the retest of this area to show it is not just a fake out, but it's powerful enough to push it to the upside, right? And then it happened. I started to see head and shoulders. I was actually thinking to myself that, oh, we've broken back into this, this range, and then we might start look for sales to the downside, and this might have been a fake out. And then it retested it, and my confidence was strong that, oh, we're retesting it. We should have a push to the downside by next week, right? But no, the market went up. Now, what do you think I'm going to do? Start looking for sales or keep looking for sales? No, I'm now looking for buys. My buyers are shifted to looking for what buys. So after the retest, the daily time frame then broke structure. The daily time frame broke structure, broke counter trend line and whatnot. So the daily time frame broke structure, broke counter trend line, and now we have executed the buy. And the buys came in from the left shoulder. The buys came in from where? The left shoulder. You see what I'm saying to you? That's where the buys came in from. This is an entry time frame for head and shoulders. After it has broken the right shoulder, after it has broken the left shoulder rather, expect it to come and retest the shoulder, and then you can look for sales from the lower time frame, from the 4 hour, from the 1 hour, and then look for buys to the upside. Now, for the execution, this was how I went, right? I went to the 1 hour time frame, right? To get a very, very structured, counter trend line. And it went like so. It went like so. 1 minute. Like this. And now this was how my counter trend line was. I drew it. Now you might be thinking, oh, it's too steep. Like it's far away from the body. It's not the body, right? It's far away from the trend. I need to enter now. I need to execute now. You need to understand that a counter trend line helps you to avoid losses. You see what I'm saying? The first thing it does is to help you avoid unnecessary losses. You see what I'm saying? So moving forward, I executed, and then if I was to enter this trade, this would be my first entry after the break. Boom, buy, right? But I was already in the trade and I had spare risk. I had what spare risk, and then it came to retest the counter trend line. So after the retest with a bullish engulfing confirmation, this was it. Buys were executed. You see what I'm saying? Stop losses right below. Buys were executed, stop losses right below. And then we can see that we even have more confirmation that this should push to the upside with a huge bullish engulfing candle. Very, very huge bullish engulfing candle, Marubuzu rather. And then it went all the way to upside. And now we are optimistic that my TPs are around here. My TPs are right here, 14500. We're optimistic that price should come all the way to this level with a 5-to-1 risk to reward, tight stop loss right underneath. You see what I'm saying to you? So this is the execution for Eurusd. Now the thing is this, yeah. I had an idea, or rather, my original plan for Eurusd wasn't to execute, excuse me, off of this level. It was risky, but yes, it wasn't to execute off of this level. It was rather to execute from this level. You know, because I execute my trades from daily areas of interest, not from nothing but these prices, right? So my plan was to execute from here, but I saw an entry and I'm willing to take the risk. If you see what I'm saying, the first thing I did was not to, oh, it's going to give me more money. No, the first thing I did was to anticipate my risk. If I take a loss, am I okay with it? If I take a loss, can I sleep at night? Even when I know that I could have entered from here and avoided the loss, can I sleep at night? Yes. That's the first thing. That's the first thing that comes to mind. It's not, oh, if I take this trade, I'm gonna have a 5-to-1. Oh, I'm gonna be up 5%. No. It's how can I take the risk? Can I suffer the losses that I'm going to procure from taking a trade like this? And the answer that came to mind was yes. Not just because I had money or capital, not money rather, I had capital to waste, but because the risk itself is reduced to 0.5% or 1%. You see what I'm saying to you? So moving forward, that's for Euro USD. It's simple, it's short, and it's sweet, right? So for USD card, I'm also in a trade on USD card. It's perfect. It's a perfect trade. These are the two pairs I have for the week. There's nothing else but these two pairs. These are the two pairs, and you can easily execute as well. So on USD card, right? On USD card, we can see that we are rejecting from here, and this place from this area right here, and it has been this data has been backed from all the way from 2015, 2016. So from 2016 to 2020 and to now to 2025, you can see that in every gap there's at least 4 to 5 years from here to here, 4 to 5 years from here to here, 4 to 5 years, and you can see that with these little data, you can see that we should be pushing to the downside. USD card might as well come all the way to 1.21000 here. USD card might see itself here. Why? Because the market moves from a range to range to a range. If we conquer this range right here, as we have, right, we're expecting the market to also conquer this range right here, and to also conquer this range right here. But the first idea right now is for us to conquer a specific range, which is from a 1.38000 all the way to 1.31500, and that's about what? And that's about 700 pips. So we're expecting the market to fall all the way down here. And now we need to start looking for confluences. Okay, why should the market get all the way to 1.31500? Why? What are the data behind it? What are the confluences behind it to show that okay, yes, it should go that direction, right? Now the first thing we need to note is that we're on the monthly time frame. Now we need to see why would it go down? What's the monthly saying? Now the structure of the monthly It's still bullish overall, but we are rejecting from a very, very important area of interest that has been that has been giving ping ponging the market, so I'm saying, back and forth for the past 10 years. So now we can see a very huge bearish engulfing. This bearish engulfing candle in Marubozu candle is basically engulfed one, two, three whole months. So in 1 month, we're able to collapse in the market and engulf three whole candles. You see what I'm saying to you? Now the month has ended, right? We're expecting a new month. Right, today is the first, right? So we're expecting a new monthly candle to form, right? So on the weekly time frame, now we don't trade on the monthly time frame. We don't execute on the monthly time frame. We just do our analysis. We have a projection. We have a bird's eye view of what to expect from the lower time frames. You see what I'm saying to you? We need to know, okay, why would I use the weekly time frame? I need to know, why should I be using the daily time frame? All of those answers, they come from the monthly time frame. So now I know what to look for. I know that, okay, I should be looking for sales right now on the weekly time frame. We've seen that we've broken a very, very important area of interest. We've retested it, and not just we've retested it, we have a very, very, very huge bearish engulfing. An engulfing candle in the market, it's a candle that shows pressure. It's a candle that shows momentum. It's a candle that shows, oh, execute now. Oh, sellers are in here. Buyers are in here. That is what an engulfing candle does. It gives you an idea of who is in charge of your market in the moment. So right now, sellers are in charge, right? So you can see a very huge bearish engulfing candle that took out 1 2 3 weeks. So not just taking out 1 2 3 weeks, but it's giving us structure. We can see a lower low. The moment we broke this level, this structure right here, we became bearish. Now we have a lower low. So on a daily time frame, because we don't, like I said, we don't execute on the daily. We don't execute on the higher time frames, on the weekly, on the monthly. We go to we take evidence. You see what I'm saying to you? We take evidence into the lower time frames. That is what we do. We take evidence into the lower time frames to help us, give us a decision. You see what I'm saying? To use the lower time frames towards. So now on weekly time, now we are still on the subject of selling, right? We still need to look for sales. We need to look for opportunities. I cannot trade on the weekly time frame. I cannot trade on the monthly time frame, right? So I need to go a lot lower on the daily time frame. I need to look. Okay, what is the present structure of the market? What is the daily saying? Because the daily might be bullish and the weekly and the monthly they're bearish, right? So we need to prepare ourselves to wait for such opportunities to arise. But in this case, the daily time frame is very, very bearish. Now this is how I executed the trade, right? Now the daily time frame is very, very bearish. You can see right here, I have my area of interest, right? This is my area of interest from the daily time frame. It is also a round psychological number. If you look to the past, you can see a lot of reversal patterns around here. You can see the market has definitely respected this area in the past, right? But let's keep it to the present, right? So you can see right here, I not just only use my area of interest, but I also took note of the Fibonacci retracement. Now, one thing you need in trading is multiple confluences. Like I said, one thing you need in trading is multiple confluences. You need evidence to back up. You see, in the Bible, it says you need at least two. You need at least two witnesses to be able to point out a crime. It says that in the Bible. So take that into your trade, take that into your life. You need two or more witnesses to say, okay, yes, this is going to be a sell. So the first witness is from the monthly time frame. Okay, we are bearish. The second witness is from the weekly. We are bearish, right? From the third witness is from the daily time frame. The fourth witness is coming in as from the Fibonacci area of interest. So, okay, this is a great place to sell from, or rather a good price to sell from. The fifth witness is coming from areas of interest, or rather around psychological normal. Now you have five confluences. Strong enough, not even from the 15 minute or for the 1 hour or from the 4 hour. Strong confluences or strong witnesses that come from the higher time frame. Not looking. How can you go to the 30 minutes to look for the trend of the market? Are you alright? That's what I'm saying to you. So, but I'm not judging those who do. If whatever suits your horn to that. So moving forward, right? And now we can see that we are at a very important area of interest. Everyone in the world knows. Everyone in the trading space knows the 60 to 50%. Yes, once the market gets there, it's going to reverse no matter what happens. I do not care. It's going to reverse as long as you are following the trend. Rather, it is going to reverse as long as you are following the trend. Now you can also notice that the extension is also in confluence with my premeditated areas that I have marked way in the past. You see what I'm saying? So you can see that some of these things are they come together. You see what I'm saying? You're trading, everything has to come together. You cannot have a specific area of interest saying this, and if Fibonacci is saying this, you can see my Fibonacci and the area of interest that I had in mind to sell from, they are all in confluence. These things give you confidence in the market. These things give you they give you strength, weaknesses, reliable weaknesses, as the law would say, a reliable witness. You need a reliable witness. So now I have an area of interest. Now I know, okay, when the market gets here, I need to look for sales. I need to look for a means of entry. That is where the 4 hour comes in. That is where the 1 hour comes in. We need to look for a means of entry. You see what I'm saying to you? I need to look for a means of entry. Now I like to execute my trend line off of the 4 hour, but then if I go to the 1 hour, I like to try to straighten it out, make everything look a lot more nicer. And then you need to understand that the 4 hour and the 1 hour, they are just entry time frames. You can as well execute on the 1 hour as you can execute on the 4 hour. All they are meant for is to enter. So if I execute on the 1 hour, but the most important thing is I have to make sure that the 1 hour is in the same direction as the monthly, daily, and the weekly. I need to make sure that the entry time frame, whichever I choose, either the 1 hour or the 4 hour, are also in confluence with the overall trend of the market. I cannot sell in a pair. I cannot sell USD card when the 1 hour is saying is bullish. You see what I'm saying? So I need it to turn bearish, give me certain evidence that it's about to turn bearish and then execute. Now on the 1 hour time frame, this is where I executed from. First thing I did was I waited for the retest on the 4 hour. I need to point that out. My retest they happened on the 4 hour. You see what I'm saying? I waited for the retest to come into the I waited for the rather I waited for the 4 hour time frame to pull back. You see what I'm saying to you? It gives more. You can see the 1 hour time frame did pull back, but the real pullback came in the 4 hour time frame when this pullback happened. You see what I'm saying to you? So the 4 hour on the daily, they move almost similar because of the volume of candles. You see what I'm saying to you? So I need that strong evidence. I need that strong time frame to pull back. So the 1 hour, the 4 hour is the time frame I use in my pullback. So uh now after the counter trend line happened, the break and the retest and the bearish engulfing. Now I executed after the break. That was perfect. I executed after the break. My stops were above the head of this head and shoulder right here, above right here, and then the market melted in all of last week. And now you might be wondering, how can I execute? When can I execute next? Now you need to know that the market will always, it will always give an opportunity. You see what I'm saying to you? The market will always give an opportunity. Now, the next opportunity in the market is this way, right? It's either the market will pull back into this area of interest back to create some sort of a minimal, a minor lower high, excuse me, or you simply wait for the next area. Now, don't get it wrong, right? In this space right here, you might as well get something like this, right? Lower low, a lower high, a lower low, a lower high, right? A lower low, and then it puts in a lower high right here, and then it comes back into this area, and then sells all the way from there into that demand rather, and sells all the way from there. Something like this may happen, and then this would be your area of entry right here, and then you can execute. Something like this might happen, or it may not happen, but if you were to execute in the nearest future, this is what to do. But for now, the train has left the station. That's what I'm saying to you. The train has left the station, and I would advise you not to chase it. Wait for it to come into a stop. Wait for wait for the market to come into a stop. That's what I would advise for you to do. Wait for it to come into a stop, then you can start you can execute. But if you are trying to pursue the market, my brothers, my sisters, they have gone. That's what I'm saying. The train has left the station. So USD and USD card, we do not need to analyze tens of pairs. We just need to pick the best with the best opportunities. So for Euro USD and USD card, these are the analysis. These are the projections. If you were looking in a specific direction before, this should also give you a very very detailed explanation of why your direction might be wrong or why your direction should be right. So I pray and I hope that you lot have a great week. Trade and observe your risk. Follow your training plan. So see you lot later. Ciao, ciao.